Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's take a look at the gold market. So in general, just minor update on the gold. This market, as you can see, has reached the resistance area that we have specified. This is 1948, 1958 confidence area, and also we have the OP target on the longer time frame. Obviously in this point it's not really logical to consider new long entry, just because existence of the strong level suggests that it would be better to wait for some pullback before taking a new long position, wait for some dip to buy. On the euro currency, you can see already some pullback has started, and actually the gold market could fall very soon. At least we will see. Speaking on the long-term entry, it obviously makes sense to wait. Speaking about the short position, currently guys, I do not see yet any bearish signs around this area. Yes, level has been touched, but the market hasn't formed yet any bearish reaction. It means that the price could fluctuate a bit around this area. Maybe some patterns will appear a bit later, depending on what the data we will get. But despite the recent euphoria across the board, and you can see the rally on all markets, the gold market and the euro currency, we suggest that it's mostly the speculative tricks, and as overall fundamental background hasn't changed. Rates remain at the high level, so probably we expect that the inflation will keep rising in the nearest few months. So we treat this pullback as a temporal by far, because to start thinking about major reversal on the markets, we need to get corresponding fundamental background. It has to change, but now we do not see any drastic changes in it. Slightly weaker job report and slightly lower gross domestic product numbers for the few decimal points absolutely doesn't change the picture. And we think that in the gold market, this rally looks really interesting and pleasant to deal with it, but we still think that it's mostly the short term. So we will see. On the lower time frame and full time frame chart, you can see what has happened. Market hits the OP that we have specified, but take a look that market is forming some kind of the minor consolidation, kind of the pennant or something of that sort. And that suggests that, as I said, here might be some fluctuations in an area of the $10 around the 1950 level. So maybe these fluctuations precisely will be for forming some reaction, some pattern on this area, especially if it will be supported by the statistics. On the hourly chart, as a possible target of this pullback, as I said, this might be the Gartley steeple to sell, and if downward action will start, this probably we could consider a few destination points. Normally, the target of the 222 pattern is the 30% retracement on its body. So it means that the market could reach an area around 1921, 1924. This is most probable destination point of any Gartley steeple 2 pattern. Additionally, if you trade on very short-term time frames below the hourly chart, be aware of this level. This is 1931, 1933. Here we have the hidden Giordano reaction point, which is a gap, and it's used for building the hidden fib levels. And it means that around 1932 area we have not just the fib level but confluence. For us, it's maybe not as important, is because we're dealing with the high time frames and the full time frame chart in particular. But if you trade on the very small time frames, this might be very important. Speaking about taking the short, as you can see, nothing's going on yet. So we do not have any clear bearish pattern. I would say even more, as I said earlier, here take a look, minor pennant is forming, and that might be the sign that market is trying to or will try to show some spikes and fluctuations around the confidence resistance. So other words speaking, and besides take a look here, definitely we have the signs of the bearish or bullish dynamic pressure, because the MACD forming downside action, trend turning bearish, showing bearish direction, but price action is not. It could lead to some spikes around this area. So other words speaking, it makes sense to wait if you are considering scalp short position on the intraday charts. For the bulls situation, as I said, so obvious as on the euro currency as on the gold market, we're waiting for the pullback, because it's not really good idea to take the new long position right around the confidence resistance.